First Indigo. It says it's not interested in Air India anymore, at least not under the proposed divestment plan. The airline, which was one of the first companies to show keenness in acquiring the national carrier, is also one of the first to pull out. Now, Samit Sarkar did some very interesting analysis yesterday on why Indigo is at the highs, and then there's news that has come in as well. So, Samit is here with us for a long period of time today, Samit. Let's start off with this deal, and no deal for now, rather. How does that augur for Indigo?
So if you see, Indigo had first expressed interest for Air India back in July 2017, and since then they have repeatedly said that they are only interested in Air India's international operations and Air India Express, because they are saying that they are not in a position to turn around the entire Air India. And if you see the current proposed divestment plan of government, it includes 76% stake in Air India, which not only has the domestic operations but also the 50% stake in the ground handling unit, that is the AISATs. So they are saying that they are not in a position. Now this is the second reason why I think they must have opted out, and I think this is one of the important reasons. Now government is going to own 24% stake in Air India. Now when they had first expressed interest, they had clearly said that they do not want any kind of joint venture with the government. They also said that they don't want government to even hold a majority stake or even a minority stake. So this could be the second reason what could have triggered them to opt out from this bid. And specifically, these are the two reasons what led Indigo to opt out from bidding for Air India.
Yeah, the key is though, Samit, that I think Aditya Ghosh's statement yesterday was nowhere speaking about this combined stake. It just spoke about how we will not be capable enough to turn around Air India and its current operations. So they kind of mentioned that it's nobody else's thing, but we don't think we are capable enough to do something like this.
Managing the optics, right?
Yeah,
they wouldn't want to come and say, hey, government, we don't want to do business with you.
Yeah, something like that, to be honest. And Samit, I was just wondering, brokerages haven't been it's been a mixed bag, right? The reactions from brokerages, to be honest.
So yeah, it has been a mixed bag. Motilal Oswal is saying that the stock might react positively because they are staying away from this, while SBI Cap is saying that the stock had run up in the past, like if you see for the last 4-5 days, it has been continuously running up, and they're saying that run up was because the investors were thinking that Indigo might get Air India at a cheaper rate because there's no much competition, so the bidding might not be that competitive. But now, as Indigo has opted out, so there could be some correction that SBI Cap is expecting. So let's see how it works.
That's interesting. But it's also having its own share of problems, and despite all of these problems that may be there with engines, Indigo is flying sky high.
Yes. Now, if you see the share price movement of Indigo year to date, that is for 2018, you can clearly see how Indigo has outperformed its peers. It is up around 20%, while Jet Airways is down close to 25%, and SpiceJet is down 7%. Now, this is despite three very concerns for the company. That is, first is that rupee is depreciating. Now, it is depreciated by close to 2%. Fuel prices have increased by 7%. The company had grounded aircraft which went on to cancelling 935 flights. Now, why these two are concerned? Because most of the expenses of an airline company is dollar denominated, so weaker rupee will increase the cost for the company, and fuel cost accounts for nearly 1/3 of their total revenue. So this is the reason why this could be also concerned. But despite this, the stock of Indigo has outperformed. So let's see what could be the possible reason. Now, firstly, if you see the passenger growth for the company, for the first 2 months of 2018, that's January and Feb, it has picked up, and it has been at it has grown at a higher rate when compared to its peers like SpiceJet and Jet. For the month of Feb, it increased at around 26% compared to last year, while for Jet and SpiceJet it was 14% and 18%. Now, this does not show the impact of March because of the cancellation of flights. This does not show that impact, but that impact is expected to be limited, because if you see the peers of Jet Airways, the nearest listed two peers, that is SpiceJet and Jet Airways, they are running at a very high capacity utilization. Now, for SpiceJet, the passenger load factor was 96%, while for Jet Airways it was close to 90%. So these passenger load factors were very high, so the capacity utilization of these companies were high. And in fact, if you see among the top 8 airline companies, 6 of them were running at a passenger load factor of 90% plus. So this could be one of the reasons. So if you see, this capacity constraint can will limit the impact of passenger growth and market share loss for Indigo. So on the financial side, if you see, any loss that the company will have because of this cancellation of flights will be reimbursed by Pratt & Whitney. So on the financial side also they are safer. Also on the passenger growth factor and on market share loss, the impact is expected to be limited because of capacity constraint and higher passenger load factor of peers.
and that will continue. The passenger load factor growth, in all probability, will continue. Or the passenger growth numbers will continue.
No, I'm not saying the passenger growth numbers would continue, but the impact of that would be lesser because the utilization level of its peers are also at a very high level. So the shift of passenger would be limited.
Okay. Interesting. Somit, many thanks for putting that into perspective. I mean, I was wondering if people or brokerages have made any kind of predictions on what is passenger growth looking like for the current year, and whether Indigo can, therefore, by virtue of the dominant share that it has, sustain that passenger growth number as well.
No, there have been no predictions on that front, but if you see in the last 1 year, passenger growth has been in the range of close to 17% on an average, and Indigo has made the most of it. It has added around 27 aircrafts in that period. From 126 to now, their aircraft fleet size is close to 153, while that of Jet Group has increased by only 3 aircraft, and for SpiceJet it has increased by around 11 aircraft. So Indigo has made most out of this, and by adding more capacity, they are also maintaining a healthy passenger load factor of 88 to 90%. So you can see by adding more capacity, they are also maintaining passenger load factor. Now, multiple brokerages are expecting the air traffic growth to be in the range of 15 to 20% annually over the next 3 to 5 years. And all the 3 airliners are going to add more planes to support this. And in this also, Indigo is going to add the most of it. Indigo has firm aircraft orders of around 445 aircraft. And Jet Airways, along with Jet Light, has orders of around 150 and SpiceJet of 200. So you can see how many more planes that Indigo is going to add to support this growth going forward. Lastly, if you see on the fuel side, now yes, a higher fuel cost and weaker rupee is a problem for the airline companies, but if you see the cost per available seat kilometer for Indigo, it is the lowest, it is 3.3, and this gives a big margin for Indigo to bear this impact of higher fuel prices and weaker rupee in a cost competitive market. Now, analysts also believe that the higher fuel prices are not directly impacting Indigo because they have been passing on the hike. So whatever the reason could be, if they are passing out, they are not passing out. In this scenario, Indigo is safer when compared to SpiceJet and Jet Airways because their cost per available seat kilometer is the lowest in the industry. It is in fact 13% lower to SpiceJet, that is the nearest competitor that it has.